Hey everyone, welcome back to Corporate Decoder, where we dive deep into the corporate world and uncover the stories behind the numbers. And today we're looking at a filing from the Federal Home Loan Bank of Atlanta. And let me tell you, their latest report is all about the money they are borrowing. And it is a big deal because this is how they fund everything they do. So what is going on is the Federal Home Loan Bank of Atlanta, or the bank as they call it, needs cash to operate. And they get most of this cash by selling things called consolidated obligations to investors. Think of these as formal IS or bonds. These aren't just the bank's promises though. They are actually a shared promise from all 11 federal home loan banks. Now these banks are watched over by the Federal Housing Finance Agency, and this agency can even step in and make one bank pay for another bank's debts if needed. It is a kind of safety net. This particular report is dated the 17th of September 2025, so it gives us a snapshot of their financial activities around that time. We see some key identifiers here, like their commission file number and their IRS employer identification number, which help distinguish them within the vast financial landscape. Interestingly, for this report on the exchange, it shows nothing registered. This is important because it suggests that the securities being discussed in this filing, the consolidated obligations, are not listed on major stock exchanges in the way a normal company's stock would be. Alright, let's get to the heart of it. This filing is specifically about new debts the bank has taken on or is about to take on. It details the creation of direct financial obligations. This means the bank is borrowing money under a formal agreement. It is not just a minor detail, it is a core part of how these institutions function. They borrow money to lend it out. The really interesting part for us is Schedule A. This is where they list the specific debt instruments they are issuing. This schedule is a crucial window into their borrowing strategy. It tells us what kind of debt they are taking on when it matures and how much it is for. Let S look at the details in this schedule. We see a trade date of the 18th of September 2025. This is when the agreement to issue the debt was made. Then there is a CUSIP number, which is like a unique fingerprint for this specific debt security. Everyone involved in trading it uses this number to identify it. We have a settlement date of the 22nd of September 2025. This is when the actual exchange of money for the debt security happens. This is the real transaction. And importantly, the maturity date is the 10th of September 2027. This means the bank promises to pay back the borrowed money plus interest on this date. They are essentially locking in this debt for about 2 years. Now here is where it gets a bit more nuanced. The call type is listed as optional principal redemption. What that means is the bank has the option to pay back this debt early if it benefits them. This is common in the bond market. The call style is Bermudan. This signifies that the bank can choose to redeem or pay back the debt on specific dates that occur periodically between the initial offering and the final maturity date. It is not an all or nothing early payment, but rather a planned option. The rate type is fixed constant. This is probably the simplest and most common type of debt. It means the interest rate on this loan will stay the same throughout its entire life. No surprises. The coupon percentage is 4.115%. So for every $100 they borrow, they will pay investors about $4.11.5 in interest each year. And the amount borrowed here is $50 million. That is a significant sum. So what does this all mean? The Federal Home Loan Bank of Atlanta is borrowing $50 million at a fixed interest rate of 4.115%, with the option to potentially pay it back early. This is not a risk that affects individual investors in the stock market directly, but it is a fundamental part of how this institution manages its finances and supports its members, who are usually financial institutions, themselves like banks and credit unions. Looking at the signatures at the end, we see Thomas J. Costello, MBS Portfolio Manager, signing off on this report. This indicates that someone in a senior management role overseeing mortgage-backed securities is responsible for ensuring these financial obligations are properly reported. Now let S piece together the story here. The Federal Home Loan Bank of Atlanta is a major player in the financial system, providing liquidity to its member institutions. When they issue debt like this $50 million bond, it fuels their ability to lend money to those members. The fixed rate and Bermudan call option give them flexibility. If interest rates were to fall significantly, they could potentially refinance this debt at a lower cost by exercising their call option. However, if rates rise, they are protected by their fixed rate they locked in. From a Warren Buffett style perspective, we were looking at an institution that borrows to lend. The key is how effectively they manage this borrowing and lending. A fixed rate of 4.115% for a 2-year term is a reasonable rate in many market conditions. The fact that it is a joint and several obligation of all 11 federal home loan banks spreads the risk. It is not a secret handshake or some complex maneuver. It is just standard financial plumbing for this sector. The main takeaway is that the bank is actively managing its funding needs by issuing new debt. This $50 million issuance is a concrete example of that. It's not about explosive growth or dramatic gains, but about stable financial operations. The risks for them are primarily tied to interest rate fluctuations and the overall health of the financial institutions that are their members. So, what is my take? The Federal Home Loan Bank of Atlanta is functioning exactly as it is designed to do. It is borrowing money to provide liquidity. The fixed interest rate offers stability and the call option provides flexibility. This specific issuance is a piece of the larger puzzle of how they maintain market confidence and ensure their members have access to funds. There are no glaring red flags here, just routine and important financial operations. Alright, that is our breakdown of this Federal Home Loan Bank of Atlanta filing. What is your take on these numbers and what they signal for the financial institution? As future, drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.